Okay, Vinay, hi, thanks for that view. This is Snehi also joining in the conversation. When I take a look at how you are placed in terms of your large and mid-cap fund, I see your largest sector allocation is coming in banks and IT and software. Help us understand how you are positioned when it comes to banks. Are you liking PSUs? Are you liking the larger names? Or is it the mid-cap names where you're seeing value when it comes to the banking space? And also IT, you have an 8.5% allocation to IT in your portfolio. Since it is an outward facing sector and a lot of action is happening globally, especially on the back of the Trump tariffs, tell us what's your view when it comes to both of these names, banks as well as IT?
So we are very positive on banks. I think at this point of time, private sector banks appear like a no-brainer. The sector is expected to grow at a faster pace, given that the liquidity conditions are starting to ease off. This was one of the biggest challenges faced by the sector. Second, as far as valuation is concerned, this is actually one of the biggest sector which is pulling down the valuation for the entire large cap segment. So this is one of the cheapest segments in the market, and I'm talking purely about the private sector banks. These banks, in fact, the larger banks have displayed exceptional track record as far as their underwriting discipline is concerned. They have navigated most of the challenges in the market, in their marketplace, for example, microfinance or personal lending, etc., and have come out extremely strong. They generate very reasonably good ROE, returns on equity. And hence, at this point of time, given the current market environment, these appear to be the best places to be in. We are very positive on private sector banks. As far as IT sector is concerned, this is another sector which is coming out of a reasonably soft environment. It has gone through a cyclical weak and times for the last 1 to 2 years. And incrementally, we think going forward, there is tailwinds for the sector. And this is not a great sector from a very, very long-term perspective. It's a stable sector, and it's likely to just deliver volume growth and value growth in line with our nominal GDP growth. But nevertheless, it's a great defensive sector at this point of time. And we think that it is also coming out of a cyclical downturn. So it has good returns on equity characteristic, and it is also going to see some cyclical tailwind for sales growth. And hence, we are positive on this sector as well.
All right.
If you like this video, then like, share and subscribe to ET Now.